we've got plenty more on Brexit just to come because Charting Futures is here, and Abigail Doolittle is more on talking the UK through the futures market, right?
You're right about that, Caroline. We're going to be taking a look at the pound or the sterling futures and then an options trade on those futures. But first, let's take a look at the pound itself on the year, down about 3%, as you can see here, popping on the day on the possibility that that no-deal Brexit will not be happening from the UK standpoint. It could, of course, still happen from the EU standpoint on October 31st. But as you can see, all of these whipsaws up and down, the messiness, the chaos, the uncertainty around what's next. However, on a long-term basis, the British pound is finding long-term support. This chart goes all the way back to the 70s, and we see over that time period a huge range of whipsaws against the dollar at the lows back in 1985, closer to $1, not quite there, and then above $2 back here in around 2009. Right now, though, finding support not just to those 1985 lows, but also to the 2016 June lows. That, of course, was the original Brexit vote. So we're right back where we started after that original vote to talk more about what might happen and if that support will hold and the pound will go higher against the dollar. I'd like to bring in Vincent Cignarella of Bloomberg. Thanks so much for joining.
Good to be with you.
And what do you think of that chart? Do you think that that support will hold?
No, I think in the longer term it will. We're going to see some, ebbs and flows depending upon how the Brexit vote goes. But I think longer term, sterling trades much in the level of about 160 on the cash basis, and it's very likely over a 5-year period we're going to reach back to that 160 level again.
And that's exactly what that chart, so right that middle of that range level. So you have a more near-term chart, and you have a great function app. You're calling it on the Bloomberg terminal here.
This is something I wrote about a little while ago, and a lot of traders aren't aware of. There's a page on the Bloomberg terminal called Apps Go.
Okay.
And if you type Apps Go, this particular function is, this particular app is called a DVAN, David, Vincent, Apple, Nancy. And if you type that in there, what you're going to get and see these flows that are created by this volume metrics, and the red triangles signal sell and buy levels, and the bands will indicate whether sellers or buyers are in control of the action at the time. So I did a longer term one just to kind of support what you were talking about, and you could see that green channel at about a month ago and showing how sterling's really bounced off the lows in these futures. And what this would do for you as a more of a day trader, if you would, if you put this up on and you went out to here and you did a 1 day 5-minute chart, you can see the actual real day-to-day, moment-to-moment changes in what traders are doing, and you can get an idea what the momentum is on a daily basis.
This is bullish super quickly, only because we want to show the options trade that we were taking a look at, that Seagull. The idea is that the Seagull options trade would hedge in a long position.
Yes. So if you happen to be short or you happen to be a hedger who needs to buy sterling for commercial purposes, there's an option strategy on the future called the Seagull. And what that is you buy a near term at the money call here at 123.90, which is basically where we're trading today. You sell an out of the money 126.69 call, and well, actually, this should be a sell also, not a buy. I may have mistyped that. A 121.30 put. And both of these strategies help finance the purchase of the call, which basically makes it a zero-cost option. And it locks in a spread on sterling, and it's sort of a low vol structure, which means you're kind of hoping that there'll be a delay in the October 31st Brexit.